The last sort of expansion of crypto was around 2021, and lots of new people came to crypto, and that's tailed off.
What would it take to push it there?
We don't know how to get there yet. There's a lot of arguments. Trump, he tweeted about this.
My plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
So he could be a driver. It could become a political issue. Great quote was, Bitcoin teaches you everything you didn't know about computers and everything you didn't know about money.
Solana or Ethereum? You have $10,000. How do you invest it? What does your portfolio look like? What is your advice, Alex, for a young aspiring entrepreneur that wants to get into this game of crypto?
Do it.
What do you think the price of Bitcoin will be in the next 5 years?
5 years is a long time.
2029, I open my phone, I look at Binance. What is the price of Bitcoin?
Today, we're thrilled to have Alex Chehade on the show. As the ex-general manager of Binance FZE in Dubai, Alex brings nearly 20 years of experience in finance, bridging traditional finance with the dynamic world of cryptocurrency. With a mission to simplify crypto adoption and compliance, he's making digital finance accessible to all. Join us as Alex shares his journey and insights into the future of finance and innovation in the crypto space.
Alex, welcome to the show. Let's kick things off with a little bit about you. You went from the world of finance all the way into the world of crypto, and we just want to dive into it and understand more about you. We'll start with a rapid fire round of questions. Feel free to answer in the way you like. Ready?
Yes, absolutely. Thank you.
Okay. First of all, I want to know, how do you keep your mindset in check? How do you balance all of this?
I guess through sports.
Okay.
I'm currently nervous about competing in a triathlon in a couple of weeks and realize that I've not done enough training. But it's a nice outlet. I used to play a lot of basketball as a kid and at university, and then outside of university, I used to play for a couple of teams in London. So just being active really disengages. Blood flows to your muscles instead of your brain. Right? It's great at relaxing you.
And you do sport every day or every other day? Or
I try to do every day. I did a cycle this morning. I think I did a run for the last few days before that. As long as there's time, but most days, at least 5 times a week.
And do you feel like it affects your mental health?
For sure it does. For sure. I don't zone out like a lot of people do. And I use it to think, but my thoughts generally... like you're problem solving, right? You sort of go through and you unpack things, and especially you run for sort of an extended period of time, you're just alone with your thoughts, right? So you think about, I don't run with music.
You said you never run with music?
Never.
Just you and your thoughts?
Yeah. And I enjoy that.
And you do your thinking, you solve things when you're running, or is it just...
I don't think I just unpack things and run through scenarios and, just sort of like, how's this going? Try and like take a step back. I don't think there's no like poignant thoughts I haven't like had any crackpot ideas or, genius moments, but it's just nice to sort of, I guess, like shuffle the papers metaphorically, and get everything in order, think about what we're doing, and then, kick off.
Awesome. Okay. We're going to jump into the rapid fire round. One gadget you can't live without.
Sadly, a phone.
A phone?
Yeah.
The year you discovered blockchain?
2010, I think. I mean, we were trading through the financial crisis, and like everyone, and we were trading interest rates, and these things were all over the place. And so this was the birth of Bitcoin. So quite quickly we heard about this idea. 2012 was the first time I bought a bit of Bitcoin. And then 2016 was the time I decided this was something I wanted to pursue, with everything.
And did you sell the ones you had at 2012?
Yeah. I
pizza.
have, yeah. So the crypto brings a lot of people to start thinking about trading. I was a trader before, So, I learned how to trade. I learned how to control risk. I learned how to sort of exit. And, I had a great trade with those early Bitcoin. Not the best trade. Could have been much better. But like being a startup founder, you need to accept you're going to be wrong sometimes and not get caught up in this. So, I bought in, sold, bought in, and I bought back in. I actually exited all my Bitcoin about 3 months ago, but bought some more back recently.
3 months ago from today.
Yeah. Now I've left Binance as well. I'm a bit more active on my positional trading. And I was where Bitcoin was, I was happy to sell it and look at some other assets. And, unfortunately, with some of the geopolitical risk and everything else, I moved some of my portfolio back into Bitcoin.
Interesting. So the geopolitical risk made you move your portfolio back from the financial stocks into Bitcoin.
Well, from more risky crypto assets.
More risky, exactly. And what sort of a book, your favorite book that you would recommend to someone to read to understand more about crypto and financial markets?
Ooh, So the old Market Wizard books are really good about financial markets because there's a few of these and it really gives you insight into the markets are irrational, but there's a lot of human actors in it. And so you sort of understand how the markets function. There's a little bit more about commodity trading, more than sort of equity trading, but there's a good story to read about the markets and people involved, and then I think it sheds further light rather than something so abstract. And maybe if you're not involved in finance, you look at Bloomberg or you see in these news and it's just like it looks like the Matrix to you, right? Like streaming numbers doesn't mean anything. But when you hear stories, when you see these things, it brings it to life, and maybe that brings more interest to people.
And what's the name of the book with that?
Market Wizards.
The Market Wizards.
Yeah, and this is what a lot of people tell you to read to learn to trade.
What's one thing you love about Dubai?
It's the lifestyle next to the beach. Where I used to live quite close to here as well. And again, scratch that itch, wake up in the morning, jog to the running track and go along the running track.
Yeah.
And, as far as you want, you can go up to the canal, you can go even further. But there's like kite surfing, the accessibility of good lifestyle. And then that's obviously something you've driven as well with healthy eating. I studied in UCLA as well. And it's very reminiscent, right? In LA and a lot of the west coast of the US, it's a healthy lifestyle. It's outdoors. You have that accessibility, and that's my favorite thing of Dubai.
Interesting. I see you're into a healthy lifestyle, and I feel that's with such a high obesity rate around us here in the Arab world. I think that's picking up a lot. People that are looking for more healthier things to do. You said you went running, and I try to do one thing a day. So for me also, I feel like super important for also my mental health. If I skip a workout, I feel like sometimes I haven't done enough, or I'm worried about something. The minute I play soccer or I do that thing that I wanted to do, I'm back into I get into that flow state where I'm not thinking about my problem. That's kind of for me personally. What's your favorite cryptocurrency right now, and why?
That's very tough. I'll talk about Solana. It's an interesting point. So Bitcoin is an outlier. It's the first. It's arguably a store of value. Some people argue it's not a store of value, but it's sort of like tier one crypto. And then you have the sort of these second generation cryptos, things like Ethereum, like Solana, like Nia, where there's a compute. So it allows you to build applications on the blockchain. So there's a mechanism to write programs on the blockchain and execute them. So Ethereum was sort of the first, and it's the largest and the most well established, and BlackRock and other big institutions are using it. but Solana has a completely different culture, and so much that these two sort of crypto communities are sort of pushing and vibing against each other. And Solana's done a great job. They're really community focused, and they're building great projects. Some of the deep in decentralized physical infrastructure projects. So this is some of the thing I see crypto, the applications, really helping people, right? And so these decentralized applications allow you to share peer-to-peer
Sharing.
right? So you can share Wi-Fi and get rewarded in tokens. You can share other parts of infrastructure. You can create a sort of community, and you have like community shops where there's the goal is to provide for the people with the commodity and the consumers of the commodity, and not like a corporate entity. And so there's a lot of projects like that on Solana, and they're pushing a lot. The blockchain is really, really quick. Transactions are cheap.
It's the fastest Solana, right?
It's one of the fastest. I mean, it's fast enough. There's always someone that can like ramp up a faster blockchain.
And low gas fees, I've heard.
Yeah. So it makes building these applications much more simple. It's not as decentralized, and it's not as sort of abstract of like a centralized party as Ethereum. And that's part of the friction, because it functions so quickly and so cheaply. It's not as decentralized. And so, it's stepping stones, but I think that they're doing a great job building community, bringing people into crypto, and building good products.
I've heard a lot of meme coins are being created on Solana.
They are indeed. And I do trade some of these tokens. If we take a step back, so what are meme coins? People said to me, like, meme coins are tokenized culture.
Tokenized culture.
Yeah.
So interesting.
Yeah. So that was, you sort of sit and think about that. Yeah, okay, I understand. And this is then being hijacked and, and because it's so easy to replicate, and that's what's happening. And you're getting lots of sort of lower value tokens. But if you think about what it is, like, it's tokenized culture. It's a token for community. So there's no like outside utility of these tokens, right? You can't pay bills, or I mean you can, but that's not the utility. Utility it's just a cultural affiliation, like a membership, where you own these tokens, and you get to see people buy in. And we see this in social media, but there's no, all the value still stays with the companies that run these enterprises, right? So the Facebooks, the X, the Instagram, you see a mass of people, collective decision making, community, and this is the first version of being able to sort of tokenize this and look at how it works. Now,
right.
Obviously it's been hijacked when you can you create this token and then you start shouting to the rules, like, buy this, it goes up, you're only going to make money. And then you
hype.
Then you get the FOMO and everything else, and it pumps, right? But take a step back. This is what it is. It's tokenized culture. It's tokenized communities. And what a lot of crypto, and I was having a conversation with a crypto founder yesterday, and they have a token. And he's built a nice use case. He distributes he has a real company. They do security audits, and he distributes profit into this token. And he's trying to build meaningful utility in this token. It's hard to build utility into tokens.
Why would you say that?
Because they're still niche. You still need acceptance. You still need people to use this. And, as, I'm finding out at the moment, and other people found out, if you want to make a crypto startup and have a token for this, we still have to have a company,
Yeah.
right? And this is what's the UAE is attracting from all the Emirates,
Right.
bringing crypto companies to establish some kind of formation here, because you still need to pay bills. So you can pay some people in crypto, but not everyone, right? You still need to issue labor contracts or employment contracts, and that, the counterparty needs to be an entity.
Right.
So you create a company, but what you want to do as a crypto founder really is you want to have the token represent the project, right? This is where we're moving. Like, tokens represent the community, the business. You incentivize people to hold it. Your loyal customers. This is no different to loyalty points, but it's all tokenized on the blockchain.
Right.
So you want to build this, but you have an entity, right? But you want to transfer all your value into the token.
Because say you have a traditional business, a restaurant, and they say we're going to deal in crypto. Customers come in, they buy with crypto. You're saying that you're not able to pay your DIWA bill and your bills with crypto, so at some point it's going to have to convert into cash.
Yeah. Your life insurance,
Right?
your school fees for your children, whoever. Like, so there's still a crossover, and then going back to the token, Bitcoin can just be used as a payment method or a store of value, but it's still very volatile. So whether it's a good store of value for people that are very price sensitive, it's not. But you want to have a token that incentivizes people to use your product, keeps loyalty. You can then use that for sort of governance. So allowing your token holders to vote for things, because then you're really engaging with your users, right?
Right.
The people that build, right? So some of the DeFi protocols, they have, any new feature or service, they put a proposal and then all the token holders can vote.
Right.
Right. And so, it's engaging your community and making sure that the people that are bound to your product or like it or just holders have engagement. And I think it seems to me like a better version of sort of than equities, right? Because it's a little bit more diluted. You have the large shareholders of big companies, and they involve. They get involved
swindle
in
the minorities.
Yeah. But here it's back to empowering people.
And that's what crypto is all about.
Yeah. It's all about empowerment. It's all about inclusion. We get caught up in the glitz, the glamour, the controversy, but the idea was, it came from like a product called sort of like digital cash. As we're moving into a digital age, we just needed a product that sort of fits our technology, right? And being able to have your or wealth or on a phone or an electronic device, and being able to transact that rather than paper money, which is hundreds of years old.
Right. So would you say Solana or Ethereum?
I have more of it, Solana, but I mean, Ethereum has so many smart people working on it. This is one of the criticisms. And again, going back to the sort of startups, right? The product people are not good at getting out there and selling the product, or not good at like really sort of captivating people. They're just building what they think is the best product.
But which of the two has better people building that product?
That's subjective. I think the Ethereum has more intellectuals building. They have a vigorous program, a foundation that builds all the improvements, and it's also at a different stage. So it's much like the amount of wealth locked into Ethereum is substantially higher. So you need to be more cautious. So again, going back to the business analogies, when you're a small startup, you can pivot. And when you're a small startup, you can take these risks.
Right.
When you're an incumbent and when you're a bigger company, you can't risk a third of your revenue if your revenues are so big. Right. So Solana is attacking at this because they're more nimble, they're quicker, and they're more of the sort of mindset, build it, break it, and innovate. Right. And so that allows them to catch up. And where the crypto market moves so fast, that's helping them, right?
Right. So, but which has the growing community between the two? Like, where are more people getting out of university to join to work for?
For sure, Solana.
Solana?
Yeah.
And you're holding more of Solana as well. Yeah. I think we got our answer. Do you believe in hodling or active trading?
So my message to most people is hodl.
Hodl.
Yeah. You're not traders. Like, unless you trade in the financial markets and that's your day job, you are unlikely to have the skill set or the time to correctly trade. Maybe you can put some long-term trades on, trade of like a month, 2 months, 3 months, but
not the day trading stuff.
Absolutely not. Before I went into crypto, I was working in the CFD industry, so contract for difference. So this is a sort of trading industry that came out of Europe, and now the CFD providers have to mention that 60, 70, 80% of people that trade these products lose money.
Just for someone that might not know, a CFD, what's the difference between a CFD and a traditional asset that you buy and hold one stock of?
So CFD is called contract for difference. So this was invented as it's a derivative. So it's a product that allows you to trade and either gain money when the price goes up. So if you buy something at $105 and you sell it at $107, you make $2. And so rather than holding the actual underlier, so again, we're talking about equities, traditional equity markets had a lot of middlemen, a lot of cost. And so this is one of the things they created to reduce that. So it allows people to speculate or hold or buy stocks without needing to actually go to the issuer or the person with the stocks and have those sort of pieces of paper.
And you're saying the report came out 80-90% of people lose money in the CFD trading?
So no, consistently. So these companies, when they advertise in Europe, at the bottom it will say each firm has to keep a record of how many people make and lose money, and on their ads they have to display how many people make or lose money.
Right.
And you can just go see, if you go to Europe and you see any of these adverts, it will say.
But that's huge. 80-90% of active traders lose money?
Yes.
And do people that get into trading know this?
You would think not.
So they do, but they still trade.
So, I mean, yeah. And we were having a debate about meme coins.
Right.
It's a zero-sum game. If you're losing money, someone's winning. But very few people are making money in these tokens because they're highly speculative. They're fraught with sort of asymmetric information. So people create the product, they know everything about it, and the retail people don't know much about it. And so, yeah, this is why we as someone going into crypto, read up about it, look at the crypto, buy and hold.
Buy and hold. That's your final for someone that. And you think so? What do you think the price of Bitcoin will be in the next 5 years?
Wow. 5 years is a long time.
2029, I open my phone, I look at Binance. What is the price of Bitcoin?
I mean, it's got to be about $250,000.
$250,000.
I think so.
That's a 4x from here.
Yeah. I mean, there's a finite number of Bitcoin. And the demand isn't going away. The institutions are coming in. We're at a point now where even the mainstream traditional financial allocators, pension funds, are looking at Bitcoin as a diversifier. And it's a great diversifier in the sense it's very uncorrelated with other assets. And, people have won Nobel Prizes or in economics for understanding the best way to get portfolio performance is invest across different asset classes, especially when they're uncorrelated.
So the best way to get a good performance is to invest in different asset classes, and Bitcoin is not really correlated to anything else.
Correct.
What would you say to the statement Bitcoin is closely correlated with the money supply, M2 money supply? Or do you think that's...
Bitcoin at the moment is too small to worry. The crypto markets do better with lower interest rates, easy money. But at the moment, Bitcoin is not affected by that, in my opinion, because the asset class is too small compared to the actual money supply.
And what do I've been looking at the graphs for a while, and I've seen when the S&P or the NASDAQ go up and down, kind of the Tesla and the Mag 7, you find Bitcoin somehow correlated. But is that just because it's too small, or am I not seeing it right? Or what would you say to?
I would say the crypto market has a little bit of correlation to the NASDAQ.
Okay.
Because NASDAQ is technology stocks.
Right.
And if you want to boil down an investment in Solana, this is a technology play.
Right.
So you're investing in the Solana blockchain technology. And so, then obviously, when tech stocks are doing well,
right,
there's sympathetic movements. S&P, because it's 500 stocks, is wider, and there's obviously a lot more variance in the assets. But for sure, there's a tiny bit of correlation to tech, but that seems obvious.
You were trading the financial markets. You decided to go trade or to get into crypto.
Yeah.
What was it that drove your decision?
The thirst for knowledge. I like to learn how things work. And I was aware of crypto and Bitcoin, and 2016, I exited an FX company, and crypto was starting to become more mainstream at that point. And I was like, why am I not involved in this?
2016.
Yeah.
And what was that moment? Was there like a pivotal moment that something happened? What was that moment that made you decide I'm getting into this?
I was searching for what to do, right? So I'd left this FX company, and I was like, do I do the same thing again? And I was just, taking my time, reading, consuming media, and it was, there were more and more crypto projects coming up within sort of the things I was reading, right? So some of the sort of media that I read covered this a little bit, and I could see it popping up, and it just intrigued me. And I was very happy to find something that I needed to learn about again. I'm happy to find things to read, think about, explore.
And what was that thing that you read that led you to get into the world of crypto?
I don't think there was a particular thing. It just dawned on me over a bit of time that this was an emerging market.
Right.
And, that excites me. And I moved to Dubai just over a year before that. And it wasn't something on my
So you found out about crypto in Dubai? Like you got into it more?
I got into it when I was here, yeah. And so, I mean, maybe I could say it was the Dubai blockchain strategy, right? Because that was around 2015, 2016. And so seeing, countries pivot and jurisdictions start talking about this, I guess that would probably be the catalyst, right? Because then you know that there's a longer term future, or at least an experiment period.
You land into a city like Dubai, and they're talking about crypto, and that kind of got you in 2015 into reading more and the thirst for knowledge. And then 2016, you did what?
I decided. I started going to meetups. And then I still see a few of the guys that were in that scene at the time. So you remember there's the popular website like Meetups. People talk about their hobbies.
Right.
And this is a great way for people to learn about crypto and talk about crypto. And so I just started going to these, and every week, a couple of times a week.
And this was in your free time?
Well, I wasn't working. I finished. So I was fortunate enough to have that time.
Okay.
And I dedicated, almost a year just reading about crypto, looking at crypto, starting to sort of trade and test and, learn how wallets work and lose crypto. And that's
Everyone loses in the beginning, right?
but even losing, losing the ability to control it, right? So if you send crypto to the wrong address, or you lose your keys, or it's gone. And so I enjoyed that. I enjoyed the experiment. I enjoyed, picking it up. I could see just the growth. I think it's turned out bigger than I expected. Again, it was an experiment. I thought we could spend some time on this, and I wasn't looking at the end. I was just enjoying the now, and traded. There were lots of different exchanges, so I'd sign up and trade between the exchanges, and that's where I started helping some companies based in Dubai sort of learn about crypto, start to buy crypto.
Okay.
And then in 2018, ADGM and Abu Dhabi released the sort of digital asset framework, virtual asset framework.
Abu Dhabi Global Markets.
Yeah.
Right.
And so I ended up going there to set up an exchange. And that's where that's where Richard Teng, the CEO of Binance, he used to be the CEO there. And then when he joined Binance, he brought a crew of people that, he was familiar with, and I was one of them.
Interesting. So Binance went from a small company and grew massively. So you said the guy, what was it? Richard.
Yeah.
He was working at ADGM and then went to Binance and took a team with him?
Yeah. So he's now the CEO
of Binance.
Yeah.
Interesting. Okay.
Yeah. So Richard was the CEO of ADGM, and I think he left at 2021, and then I think he went back to Singapore, met CZ in Singapore, and then joined Binance, and then slowly recruited a few people from industry and from the regulator, and that's been part of the journey for Binance, moving from not being regulated to being regulated.
And you joined as GM initially, or did you?
Yeah. So I joined to launch and get the Dubai exchange regulated. So so we were successful with that. I spent a lot of time with the Dubai regulators, and still have very good relationships with them. And happy to say I saw a few of them yesterday, and they've done a great thing. They've built something that's crypto specific, so they can concentrate on it, and really spearhead Dubai's sort of drive to be a sort of crypto hub.
What are the smart decisions that you think Binance did that helped them grow past all the other exchanges?
The Binance grew so quickly through global expansion. Before, lots of exchanges were sort of focused on regions, and Binance went global very quickly. And I guess more importantly, they listened to their users. It's very, and this binds very well with crypto, very community focused. So Binance clients are extremely loyal to Binance.
Right.
They've built a great brand. They've built a good community, and they engage them, right? And so any good business builds this loyalty, and they've just perpetuate that. And so the founders spend a lot of time listening to users, engaging with them on social media, finding out what they want, and Binance nailed it. They expanded their product set as the market grew, and then they just grew exponentially.
This sort of decentralized approach, Binance, they grew all over by not going local, but going global.
Yeah.
No real offices in every country. I was using Binance way before I heard that they launched in Dubai. What do you think? Do you think that this will continue to happen, or do you think the future will change where they will have offices in all of these countries and less of a decentralized approach?
To be regulated, you need to have an office. So, wherever you choose to be regulated, you'll need to have a base. What I'm seeing within the entire sort of crypto exchange industry is, the big exchange and small exchanges, but they pick a few jurisdictions. And this is what you see in traditional markets as well. So, HSBC isn't regulated everywhere in the world.
Okay.
Right. So they have big UK presence, big presence in Hong Kong. They have presence here, but it's not as big here. They definitely don't have it in all countries. But you can use your HSBC credit card or debit card in lots of places, right? And so that's what we're seeing with crypto, right? The crypto industry are now picking jurisdictions to sort of domicile themselves, to sit in and service sort of the wider range.
So what is the difference for a customer who has a Binance account in a country that's regulated, where Binance is regulated, versus having a Binance account in a country that's not regulated? Like, what can he do versus not do?
For Binance, it's pretty similar because it's one company. So if we take a step away, so regulations are external oversight of a company to protect people. So regulations are, the key tenet of regulations is consumer protection.
Right.
And so they put rules, ensure that the companies report to the regulators. So, we can all be happy that the company is operating as it says it is, in a manner that's protecting clients.
Right.
Where a crypto company or crypto exchange, and to be specific, a crypto company that performs a regulated activity, which is deemed regulated, so like exchange or brokerage, and that entity is not regulated, it means that they will have extreme difficulties engaging with other regulated products. So what does that mean? Like card processing, bank transfers. So where they engage, when we talked about like needing to engage in the world outside of crypto,
right?
That bridge is harder to cross if you're not regulated.
So you can trade, but you can't withdraw your money.
You can withdraw crypto,
yeah.
And some of these crypto exchanges, they don't have fiat money. They won't have dollars. They won't have dirhams. They won't have sterling. So it's just crypto. So you can take crypto, put crypto in, take crypto out, trade.
So that's okay.
It's just the threshold where you want to start engaging with regulated entities.
Makes sense.
So it's comfort, right? So it's it's like when you take your car to a car dealership.
Right.
Right? You stay in brand,
it's comfort,
everything's happened.
Yeah.
If you go outside of brand, they're like, well, we don't know these guys are doing a good job. So, and so it's that conformity. It's that safety net. And so I guess that's the easier way.
I think, like, from what I've learned so far, Binance is pretty interesting. They started as a global company. They've marketed everywhere, allowed people to kind of trade everywhere, and then, looked at different customer reports and, customer information to find out where to go and be regulated, basically where they probably have the most customers and where they want to be regulated, to give customers more options then to engage with the outside world.
Yeah. It's the evolution as a roadmap. What you've got to remember is there were no crypto regulations, as I'm aware, when Binance launched. Some of the first words they said in Abu Dhabi 2018, 2019, and no one went live until 2021, right? So for traditional payments and your card processing, everyone knows how to regulate this, but crypto was born and there was no regulation for this particular product. And, this is one thing regulators are always treading a careful line with, and, they understand it. You don't want to try and regulate a technology because technology moves too fast. And I guess the example is, tools can be used for good or bad. Right. And so, you have a knife, you can cut things with, or you can use it to hurt people.
Yeah.
Right. But you don't ban the sale of knives, right?
Exactly.
So this is why they try and stay away from technology and say, well, actually, if you're doing something that a service that you can regulate, we'll do this. But crypto evolved without regulation. And the reason this happened is crypto is community-led and retail-led. So normal innovations come, and especially sort of financial products, will come from within regulated entities. So they'll have a lab inside the entity, and people don't, it's tested internally.
Right.
Tested internally, then it will go to sort of a sandbox, then it might even go to a regulatory sandbox, and it's not till you see it as in the general public, it's a finished product.
This is a typical corporate product.
Yeah. So it comes out and it's fully finished. Crypto is released day one, and people see it nuts and bolts, warts and all, not working, errors in code. And that's the experiment. And this is the thing that you need to understand. It's still early. We said about losing your keys, losing your wallets. I mean, this is something we need to fix, right? We can't have the crypto, and if your phone gets run over.
Imagine that.
And
all your life savings gone.
Yeah, millions, could be billions of dollars.
Imagine.
Gone. So we need to sort of improve the user experience of this. We don't know how to get there yet. There's a lot of arguments. There's a lot of people that want to stay true to code is law, right. But people are not careful enough, right? You think of the number of times you reset a password.
I mean, exactly. I have now an app that basically aggregates all my passwords. It's like on the toolbar of my browser, and it's just there, right? And I think about that. Okay, there's that, but then for the Bitcoin, what do you do? And it's 16 words, I think.
You put those in that, but there was a password tool like this that got hacked.
Celsius?
No, the password tool. I don't want to say it in case I was wrong with the specific name.
Yeah.
But someone hacked in.
Yeah.
And they look at all the plain text, and they're like, well, these are wallets, because you can see if it's 12 words, 24 words,
right.
It's a wallet. And so they just started creating these wallets and taking all the funds.
And that's it. They took all the money.
They took a.
See, this is until this gets fixed, it's going to be hard to bring that money that's in a building. If you think about it, traditional money is in real estate, especially in this part of the world. Yeah. When you go to a normal person, you ask them, how much are you worth, or do you have money? He'll tell you, I have 90% of my money in an apartment or in a villa or maybe in a building. Very few people will think about moving all of that into a crypto wallet without making sure that the money is not going to just disappear.
Yeah.
That's also something I think really, security and safety, right? You want to make sure your stuff is there, not, I thought many times about, instead of to bypass this problem about the 16 words and the whole online hack, what if I got a physical wallet and got a safe deposit box in a bank and then just put it there?
People do that.
They do that?
Yeah. People, or you can create paper wallets.
A paper wallet? What's that?
So you can create the private key and have it these words written down, and you can obfuscate the text so you know how to read the paper, but the 12 words are written on a piece of paper in your code. You put that in your wallet, in your safe. So you can have the electronic version, or you can have it in paper.
Right.
There's I've seen gimmicky things which are quite funny, because people get quite upset. You can get the 12 or 24 words stamped in metal. Right, because they're if there's a fire, you don't want your paper
or if someone
to burn.
takes the metal and takes a picture of the metal,
because they're you've asked someone to do this for you,
right? The guy that engraved it for you, right?
Yeah, I'm sure there's a mechanism not to do that, but
I've heard you have it at different places in the world, but then again, what if?
So there's a couple of techniques where you can split. Look, so if there's 12 words, right, you can split 4 words, 4 words, 4 words, and you can pick an order, so you can split them and give them out, and so you definitely need these 3 to understand. If you start chopping linearly, it's a little bit easier to hack. So like there's processes, and you can.
What if I gave you half of mine, you gave me half of yours, the words, and then we just didn't see each other until we needed to.
Well, then eventually, if one of us is richer than the other, it creates an imbalance.
But I wouldn't be able to withdraw mine until I came back to you and took the other half, right?
Yeah. I think so generally the process is always split into three.
Okay.
So even a lot of technology now allows, computationally three keys. So then you need two to sign, and then you have a redundancy, because what happens is if you lose, then with the other two you can create and start again. So if we split, right, and we split our private keys 50-50,
right,
and my safe deposit box gets destroyed, I've lost my money, you've lost your money.
True.
So
crypto is a very high pressure environment. You've spoken about your healthy lifestyle, and how do you maintain a healthy work-life balance? Like, when do you know that you're working too much versus not?
Your family tells you. But this is I think crypto is much more consuming than other industries, because it's always on. So 24/7, 7 days a week. The market moves. It does get quiet at the weekend, but the markets are open. And I think, this exacerbates the speed of everything. So, crypto is fast paced. I would just say fast paced. I wouldn't say it's high pressured. It's just really fast paced, constantly evolving. And that, like with meme coins, just the industry has a big fear of missing out, right? Because you don't want to miss. Like, there's a piece of news, an event, upgrade. It's constantly coming. So I think it's something you just have to find balance with, but not dissimilar to sort of social media, right? People get utterly consumed in
people are on Instagram 24 hours a day. Like, that's, I've seen some people's screen times. I had a friend next to me the other day. I won't go into names or nationalities or anything. He had 13 hours of screen time.
I would love to look. When I left Binance, I was so happy that my screen time went down a lot.
A lot.
Yeah.
And you just staring at the graphs.
No, well, like when I would have my work, so my sort of personal phone, work phone, and then my work phone was linked to my laptop, right? And it's a Mac, so
right,
so unified screen time. So you're on a lot, and you're like back and forth
between your laptop and your
laptop
phone.
And two phones. And then when I've left, I've now only have one phone, and I'm much more disciplined with where it goes. And it's a choice. You can be consumed by it, or you can choose not to. Sometimes people find it harder not to be consumed. Some people are just addicted, but you have to break that addiction.
Yeah, take us back to, you said the CEO of Binance recruited you and said, "Come join us, Alex. We want you to help us set up." And how did you go about it? What was that journey like?
Fortunately, I set up a regulated exchange in Abu Dhabi, so it was I had the opportunity for lessons learned, so that was nice. The journey was great, because it was the start of the journey for Binance in Dubai. It was the start of the journey for the regulator in Dubai, and I think that's really built the relationship I have, Binance has with the regulators here in Dubai, being one of the first, being the sort of trailblazer, working through problems, fixing problems together. So both the end goal is user protection. And so this is what the regulator wants. This is what Binance wants. Binance is, as I said, so consumer driven. The customer comes first, what they want first. And, if you don't protect your customers, they're not your customers anymore.
Yeah, I keep getting this thing. I don't know, to be honest with you, it's pretty annoying because Binance keeps sending me, they sent me a while ago, update your records. And then they wanted me to put a phone bill and a DIWA bill and, the power bill. So can you tell me about that? Like, why would, it's...
Yeah, I can. So if you have an account with a company to buy your US stocks, they will be regulated, and either they're regulated in the UAE, generally ESCA, the DFSA or ADGM. And any of these firms will look at a client and they'll classify a client. And this happens in all regulations. You have low risk, medium risk, and high risk. To know whether someone's low, medium, or high, you need to do due diligence on them and KYC, know your client. If you are high risk, the business can onboard you at their discretion, but you need to know they're high risk, and you'll need to check up on them much more often. Medium risk, usually it's about twice as infrequent, so half the amount of time is for the high risk, and then you double it. And then low risk, it's even more exacerbated, so a longer time. But you still need to do it because you need.
So you need to check on them more frequently as a
high risk.
Okay.
And then medium risk, and then low risk is the least frequent because
right.
you're comfortable. But you need to know if they've moved. They might move classification. And so the only way you're going to know if they've moved is you recheck. And so you need to be consistently refreshed on whether, on where you sit, making sure the information is up to date.
But were they moved physical location, or you need to check their trading pattern?
There's a few checks, but it's to check whether your risk rating has changed. A lot of these risk ratings are built on jurisdiction.
If you move countries.
Okay. Any of these change, if things change and you move to different classification, you need to know. And regulators will look at businesses and they'll ask. So, even the banks here, right? So the central bank will go to the bank and say, how many high risk clients do you have? Right. And they'll look at how that moves over the period of a year. And if they see something that they're concerned with, they will ask them more questions. If they see stuff they're happy with, they're less likely to ask questions, right?
Exactly.
So if you go from 2% of high-risk clients to 1%, they might ask, actually, have you done something different? And if you say, yeah, we've changed our risk parameters, then they go, okay. Or if you haven't, then it just means. But this is what's happened with Binance. Now, Binance is now regulated in Dubai. And so if you're a UAE resident, these checks will need to be initiated so they can say, right, we know all our clients are high risk, medium risk, low risk, and then give that information to the regulator so they have this picture. So it's, again, the end goal is consumer protection.
Thank you for clearing it up. I was wondering why I was put through it, but yeah, I guess it's for everyone and it's for them to regulate things, right?
Yeah. I mean, it's the same for any ESCA regulated broker, same as central bank. When you want to get a new bank account, you have to do some sort of form of address check.
Exactly.
This is the same thing. We're moving to a point where crypto is viewed like an asset, like money, and we have to accept that these conditions will be part and parcel of it.
Has the Bitcoin bull run started?
No. We're the price action, it's near all-time high.
Right.
Until it breaks and it really extends, then it hasn't. There's been a lot of movement with the US ETF. Some of the other country ETFs have been smaller, but we're starting to see a lot of allocation from hedge funds, pension funds now buying Bitcoin through this ETF wrapper. At the start, it was still retail driven. So again, we say crypto is always retail driven. When they created these ETFs, I think people speculated whether a lot of industry players would come and buy. It's been still a little bit smaller. It's still people with their interactive brokers accounts. So the retail buying of the ETF has led this, but now institutions are coming in. I mean, I was at lunch with some friends in Dubai and they were asking me what's happening. I said, there's the ETF. And they're like, what do you mean? I said, okay, go to your account. And the guy got his phone out. He got his brokerage account. I said, there you go, buy some Bitcoin. So he bought some Bitcoin.
But he bought it through his bank or?
His brokerage account. So where he normally trades or has like stock investments where you buy any of these.
He just bought the ETF directly.
Yeah. So like he had some cash in the account. He went and found one of there's a few different Bitcoin ETFs. So he found one of them and he bought it. Done.
And so with all of this going on, why do you say that the Bitcoin bull run hasn't started? Just because it didn't pass the all-time high, or is there other reasons?
Yeah, that's it. So if we look at the market cycles, the last sort of bull run, the last sort of expansion of crypto was around 2021, and lots of new people came to crypto. Lots of firms started thinking about it and moving in, and that's tailed off, and we've got back to these levels without a big influx. Without, for sure.
But all these ETFs.
So the ETFs is a mechanism that's allowing people to access it in a more easy way, but I don't think it's out in the market yet. And so I say this is, if we go back to 2021, everyone's talking about crypto. And what happened was a lot of people, that was their first entry point into crypto. They all bought into crypto, and then it's gone down quite dramatically. And these people, have not had a great job of investing.
Since 2021. Yeah.
So, it went down to like 17,000.
Right.
So if you bought $1,000, it's now looking at like $270. It looks terrible, right? Yeah. So you just leave it. Now these people, you look at their account, if they didn't sell, it's back to 1,000. So they invested 3 years ago and they got the same money they had.
So you're saying some of them might take it out?
No, I'm saying that they're not excited.
But the new money?
But I don't think that until new people start shouting about it, it's not happening.
How do new people start shouting about it if the old people are not saying so many great things about it?
So it's just we haven't got to that critical part where everyone or people that have not been touched by crypto before are involved, right? So you've been in crypto long enough that you see the prices and starting to get excited because there's a bid in the market and it's good. But the people that have no touch points with crypto, it's not until it's back in the newspapers. It's not until and it's not been. There's been a bit of noise over the last year about ETF.
What would it take to push it there?
Hopefully not bad news, but bad news could be one of the things that pushes crypto.
So you're talking about geopolitical events.
Yeah, Trump, I think, tweeted yesterday about the Bitcoin anniversary. The white paper was yesterday.
Oh, really? How many years?
16.
Wow.
Yeah. So he tweeted about this. So he could be a driver, right? Or it could become a political issue. The fact that he's starting to talk about it, maybe if he gets elected, he'll do some positive things for the industry, or maybe he won't. Trump is a bit of a difficult candidate to follow with the consistency of what he says. But that could be a big driver. He could come in, make some reforms, make it much more accessible to North America and the US, and that could be the catalyst. Maybe I would like to see a product outside of Bitcoin cause this as a catalyst, right? So maybe, some crypto application goes viral,
Right, like a used case, something that will drag in users, and then from a utility point of view,
Yeah.
someone using it would say, "Let me invest in it."
Yeah. So, we have all these fads, right? I think it was the fidget spinners.
Yeah,
Right.
it came in and went out.
But something that just gets to everyone. They're at every gas station,
Right.
everywhere selling these things, right? And so a crypto moment like that, like an NFT project that captivates everyone with like a loyalty program, maybe
Loyalty program. That's interesting.
well, this is what crypto is.
Yeah.
Yeah. So some kind of mechanism that suddenly is like a light bulb moment for everybody, and they wake up to crypto. And Bitcoin, as I say, is sort of the safer, more stable than the rest of the crypto market, and people use that as a linchpin into the rest of the market. So these are some of the drivers, but it's definitely it is not being talked about by the general public yet. You get caught, like especially for me, you get caught up. You go to crypto conferences. People live and breathe it, as we say. People are addicted to it, but I don't want to pull out any particular, but like teachers, people that work in restaurants, people that work in all these industries that they don't see crypto.
They don't.
No.
So most people are not into crypto, you're saying?
Most people are not into crypto. I think the numbers are about 900 million people in the world are into crypto. That's
Out of 8 billion.
Yeah.
Which is about, like almost 10%? Or a little more.
So like
Which is
11, 12%.
pretty okay. But the 10% of the world money supply is not in crypto. So
Correct.
It's probably the lower.
But like we're next to India, which recently became the most populated country in the world.
The most populated country in the world.
And there's more people in India than own crypto.
There's more people in India that own crypto?
No, than own crypto.
What does that mean?
So there's 1.1, 1.2, 1.3 billion people in India, right?
Yes.
So there's one country with more people.
Then in crypto. Oh, yeah. Okay, fine.
Yeah. So
it's a big country, though.
Yeah, it's a big country.
Yeah.
But, I think there's just a lot of work. Like if we relegate everyone in crypto, swap with people in India. So we have our own country. We have more space.
So you're saying that it needs to be a political event that brings someone in, or a used case, like an app that goes viral, or something that'll trigger people to like learn about it.
Yeah, for now. So what's going to happen later is we'll forget about the technology. So the example that I've used recently, MP3s. Right. Mm-hmm. So remember when MP3s came out, everyone was a rush to download MP3s, ripping CDs, creating a library, sharing, and it was chaos. And then, the regulators didn't know what to do. Right. Same
thing. Yes.
Then there's these products like Napster and LimeWire, and they're saying, well, we're just sharing what people want to do. We're not at fault here.
Yeah.
Then people start putting viruses and sharing viruses, and so people, it was complex, right? And so you needed to understand how to use a computer to a certain extent before you did it. Even then, people got caught out. Crypto's a bit like that. You need to have a competency level in technology.
Sorry, I want to go back one step. So you're using Napster, you get a virus, all of this is going on, and someone comes in and regulates it?
So what actually happened was the technology improved. So, and this is a problem that we have debates with regulators, because at the moment we're trying to regulate some of the problems in the technology, whereas the technology will evolve and we won't have these problems anymore. So how the technology evolved is we have better technology, better download tools, and better mechanisms. So we use things like Apple Music, Spotify, YouTube Music, and you get what you want.
Exactly, without the virus.
Without the viruses, without the complexity.
And what does it take for a technology like Bitcoin to get from point A to point B? In your opinion?
The user experience. So there's a few things. The this is one of the things that Solana's hopes to do, right? So Solana has quicker and cheaper transactions. This was one of the problems with Bitcoin. Right? Bitcoin, relatively expensive to send funds. The block times are 10 minutes. So to be certain of a transaction, truly certain, it takes about an hour.
Mm-hmm.
So again, that's not a quick transaction. So Solana's solves a couple of these cases. Some of the other quick blockchains have solved payments, and this is a better tool. The thing we said about the safety and losing, this needs to be solved.
Whole wallet idea, but
Also, one of the things that needs to be solved about wallets is wallets are generally quite static things. So on apart from Bitcoin, so we'll put that to the side, like Solana, Ethereum, the address is static. It's account based. So if I have to send you crypto, I can then go look in your account and see what you've done.
You know my account.
So I can go look. If I know your bank account, I don't know. But if I know where you asked me to send you crypto, I can go have a look.
So you can check all the transactions of someone that is not kind of like today. If you have my bank account, the bank will protect me from you looking at my statement.
Correct.
But in crypto, you don't have that kind of protection. So if I sent you crypto, you'd be able to go and view all my transactions.
Yep.
And there's no way for me to kind of like...
So you can, again, if you have the technical competency, you can create new wallets and
transfer there and then to you without the... Yes.
But yeah, the blockchain technology is more transparent, right?
Mm.
And so
and that's what it's selling, right? Transparency.
It is to a certain extent, but there's a lot of push for privacy, right? So privacy is a demand of humans, right? Not everything is always out in the open, and that would be very tough to live with. So this needs to be solved.
But then doesn't that go back to, then you're going to have a new, let's say, a group of people that get into crypto and they're looking at decentralization, but then they want to go in and kind of create like a centralized layer where they're protecting themselves and other people. So then don't you go back again one step to, is it centralized or decentralized?
No, this is the problem between privacy and transparency. So, regulators and authorities need or want transparency and looking oversight, and people want privacy
from them,
from whoever. It's not necessarily from anyone particular, but people shouldn't need to have their net wealth transparently displayed, right? This is one of the things that everyone's quite comfortable.
So you're saying displaying your net worth should be public, but your transactions should be private.
No, I think you decide whether you display your net worth.
Like, okay, so say I have a LinkedIn profile or a Facebook profile. I can decide if I want my picture public, private. You're saying the user needs to own that kind of decision
making. Correct, right?
Okay.
You can wear fancy jewelry, fancy watches, or you can not wear a watch, right? It doesn't. You can pretend to be wealthy. You can get a big loan to buy a nice car, right? Or you can just pay cash and have an average car, right? So these decisions of what you show should be left to people. But at the moment, with the way the blockchain works and the way wallets and everything work, you're a bit more of an open book.
Right.
And so this is one thing that needs to be solved, right? And so it's all well and good understanding about institutions. You can look and, but for people,
individuals,
it needs to be improved. So as we said, the privacy, and this is something that, is really hotly debated with regulators, right? Because with a centralized entity or a financial regulator and a regulated entity, you can have protection from the outside, but view inside. With crypto and the way it's distributed and peer-to-peer, if it's opaque. If it's blocked for everyone. And this is the problem.
And who decides if it's blocked or not blocked?
The protocol or whatever is built. So that those decisions were made or are made when they build these protocols.
And doesn't change.
It doesn't change. So a lot of privacy tokens have all been banned from most regulated exchanges because the regulators...
They want to see what's happening, right?
Yeah, the regulators want to see, precisely. And so this is something we need to solve. So these are the things that...
So they ban the privacy ones because they want oversight, but people want some kind of privacy.
Yes, it's tough.
But why do you think they allow a bank to do that, but not...
But the bank still has to show their regulator what happens, right? So if the central bank in UAE comes and asks the bank for...
They'll show.
Yeah. Or if...
But I, as a user or account holder in a bank, can decide not to show Alex, for example, my statement. It will protect Alex from just going in and viewing my statement. So that's kind of...
So it's the tool, right? So maybe... So some people probably use centralized exchanges for this, right? Or central custodians. So you can put whatever you have in Binance, only Binance will be able to know that.
The minute you take it off Binance, then people can see. Interesting.
Yeah, because Binance has an omnibus wallet. It's a walled garden. So once Binance receives your crypto and they give you like a balance, which you can then trade with or do whatever you want, but they're in control of your crypto.
So a quick question. But then keeping your money on Binance, doesn't that open you up to the risk of someone hacking Binance and taking your money?
That's a possibility.
As opposed to you having it off Binance in a hard wallet, for example, right?
Yeah. So, and this is one of the things that I'm trying to help build now, right? So self-custodial, you hold your crypto, but you have better tools to do it. So less complex.
So tell us, Alex, you were at Binance, you very experienced guy. You went from capital markets into, from traditional financial markets into the world of crypto, and you worked with Binance. Great position as well. You got to see a lot of things. What is this new startup that you're working on, and what is the problem that you're solving?
We're solving for the complexity of crypto. So the exchanges like Binance were also solving this problem. So they make crypto accessible and easy, so you don't need to worry about your keys and you can access the crypto market. However, as you just said, you don't have your crypto, you've given it to an exchange. Crypto was designed to be peer-to-peer and self-custodial. So I'm solving the complexity problem of this. We have built a tool to allow you to connect your wallets, and we don't mind what wallet you have. So we let you create a wallet with your email. It's called account abstracted wallet. So you can create a wallet with your Gmail, you can create a wallet with Facebook, you can create a wallet with Apple ID, any of these traditional mechanisms to sign, and it will create a wallet for you. You can use a hardware wallet. You can use a software wallet. So like the wallets you have on your phone or these keys. Connect all of this into the platform, and then you can trade, you can see news about crypto, you can earn yield on your crypto, but you're always in control of your own crypto. And so this is the same exchange experience, but decentralized. And so this is where we were supposed to be 10 years ago, but now we're here. Technology's caught up. So we're making it accessible. And I think this is the driver of what I want to do in crypto is make it available, reduce the complexity. So we've made a dashboard, we've made the product look really simple. There are other people trying to do this at the moment. And I still look at their product and I still think it's complex. And it's because, these guys and all of us are guilty in the industry. The user experience has been so bad of late that you forget, and you've gone through even worse. So, it's like any sort of threshold training, when you do a 10K run, the 5K run seems easy. So you do a 30K run and then the 21 seems easy. And so you forget that, if you
You're saying it's all about simplicity.
It's all about simplicity, and the people in crypto now are like these advanced marathon runners. And then we're trying to bring people in to crypto and they haven't run 5K.
Right.
And so we're like, oh, for sure you can run 5K. You know, the 5K is, you know, the start.
So you're saying most crypto users are not even in crypto. There's about 900 million crypto users out of 8 billion. And it needs to be super simple back to how it was to attract new people into it. And what you're trying to solve is allow people to own their money as opposed to own their crypto as opposed to it being on an exchange. So it's a more peer-to-peer where we're all signing in with our own devices, you know, Google, email, whatever it is. You sign in, but I hold my crypto, you hold your crypto. We can chat to each other, we can transact with each other, but at all times we own our own crypto.
Yeah. It's
not really on a third-party exchange, which is true decentralization.
Yeah.
What is your startup called?
Redefined. Yeah.
Interesting.
And so, you know, again, I know you're big on branding. You know, we're redefining the engagement with crypto. We spent a lot of time thinking about the name. We've spent a lot of time trying to make the brand simple, make the user experience simple. And again, we're unlocking crypto and our target demographic, the two types, right? We want to onboard new users. So we allow people to use their email, even phone number, and sign up in a method they're very familiar, right? Like Web 2 interfaces. That creates their wallet and they're in. We're also looking to captivate on people that have funds on an exchange and that they're not really involved in crypto. You know, that they have like dormant accounts.
Like hodlers, you mean?
Yeah, well, dormant accounts. And we can bring these people in and let them hold their own crypto, be comfortable with that user experience, and then perhaps either they can earn yield products on these on the crypto. So again, very sort of safe and easy, or allow people to start using crypto.
Why would they move from that? From if it's a dormant account on an exchange, why would they move to Redefined?
Because it's the gateway to actually using your crypto. So rather than just dumping it there, so this is what we say about the utility. So there's the beauty of crypto is there's more utility than in traditional equities, right? So it's difficult to start doing things with your Tesla stock. With crypto, and one of my friends has another startup, which, you know, we might look to work with, you can tokenize your Tesla shares. And you can have these tokens. Then once you have your Tesla tokens, so say you have $100,000 of Teslas, you can then put these Tesla shares in a product where you gain interest on it, because, you know, it's $100,000, right? So you can earn interest, or you can borrow against this with a like over collateralized loan. And so you can borrow, let's say $50,000. You put your Tesla shares, tokenize them.
You pledge them, yeah.
Pledge them there.
Yeah.
Borrow $50,000. Do what you need to do with this. You know, it could even be like a bridge personal loan. Put it back, and you're good. You know, it's allowing you to use crypto. So I think it just opens up the door. It helps other crypto founders start building use cases. When everyone has crypto on their phone or freely accessible, you know, talk about money supply, it allows financial inclusion. And this is something that I can see crypto helping, like the globe, right? The freedom of money, the freedom of economic value, it will boost the global economy, right? We have pockets of productivity. We have pockets of countries that are doing well, pockets of countries that are not doing well. Allowing people to move money, freely invest is only going to help everybody.
But do you really think the superpowers of the world will allow people to just move their money around? You know, when I say superpowers of the world, I'm talking about the people that control money supply.
The freedom of money, I think, is net beneficial for everybody. So the reason there's lack of freedom of money sometimes is due to control. and the existing infrastructure, existing companies. What needs to happen now is the decision makers need to understand that crypto is it's released. It's out of the bag. Like they say, Pandora's box was opened.
Mm-hmm.
Now you know that it's easy to transfer peer-to-peer value. You need to rethink about what you want to do. And you need to say, right, well, now we know that this is a thing.
The cat's out of the bag.
This is what we need to then mitigate or understand or work with, right? And so cleaning up bad actors, concentrate on this, concentrate on other mechanisms to look after it. You know, what we should look at is, you know, you say you're worried about the powers not wanting to have people to move their money. What this does is this unlocks the people with power to move their money and be more efficient. It allows countries like the UAE to invest in other countries much easier.
Mm-hmm.
Right? It allows, it allows the sovereign wealth funds of this country to invest in the global south in an easier mechanism, because they know that the way they transfer money is easier. It's cheaper and it's more efficient, and they have that visibility as well.
Mm-hmm.
And so deploying aid, deploying FDI is easier with crypto, and so then we're going to see equalization globally, right? Rather than having the underserved global south because finance hasn't caught up. This is a financial revolution.
Financial revolution.
Yeah, this is a financial revolution with technology.
What do you think about a country like El Salvador? It was El Salvador, right, that went full crypto.
Some countries have problems protecting their currency, right? From
manipulation.
From generally for as well the mismanagement of economic policies.
Mm-hmm.
And so some of these countries have said, right, well, either we're not doing a good job or it's easier to lean on something else. And so it's going to be wherever this happens. I lived in Argentina where, similarly, the inflation is becoming out of control. And if you go to Argentina with a bag of cash, the actual cash, you can sell dollars at a premium to the national rate, right? Mm. And because you've got a two-tier system, people know.
It's because the inflation is so high.
If we look at Africa, I'm not an expert, but from my understanding, I think there's 14 countries whose central banks lean on the French central bank. And the French central bank control how their currencies fluctuated. And these countries leave deposits with the French central bank, right? So they're not really in control of their own currency. And so if we're going back to El Salvador or other countries, it's perhaps better to start building a currency based off something else, right? And so the precedent here, or something that is always hotly debated, is the gold standard, mm-hmm. right? So the dollar used to be linked to the price of gold or the value of gold, and then Bretton Woods, they decided they didn't want to do that, and since that point, the dollar has been in free fall against
right
for inflation, right? And so crypto, Bitcoin, and other mechanisms are now allowing us to sort of build baskets of wealth, build baskets of value that hopefully won't be eroded by inflation. So you can start transacting. And so if we forget, and this is a rabbit hole that many of the early crypto people and often brings people into crypto, when they start reading, well, what is money? Like, why do we use money? Okay, great. We use money because it's easier than having to barter everything or go down a line of barters and say, right.
Instead of me giving you a sheep to take wood,
there's
a way, a medium.
I need to decorate my house, so I'll give you my ring for some paint, and then I'll borrow a paintbrush, right? Like money, it facilitates this, and so okay, so then why do we have inflation? Why do we have money supply? Why are all these things? And so you go down a rabbit hole of really understanding how economics works. And there's a great quote was Bitcoin teaches you everything you didn't know about computers and everything you didn't know about money. Right? And so
computers and money, yeah.
So this is what it is, and you go down and you understand. Okay, so this is how encryption works, and this is how networks work, and there's a whole host of things you don't understand. And often in modern life, like you don't need to understand how things work, right? You just use them. Like most people don't understand how computers work. We got to a point talking to regulators where some of the regulators are inquisitive. They're like, well, how does this work? How is it? You don't need to know this. No, we want to. And it's like, well, you don't need to know this. You just need to know the end product, right? So we go back to computers, right? So do you know how software works? Do you know how the computer works? Do you know how transistors work?
Not at all. No, I use one for many years, but I have no idea. I know there's ones and zeros behind things. But
They're complex, right? But you get to learn how they do. And even with software, like building software has become so different. When I learned how to code at university, we learned about memory. And we learned about how to store variables and different types of variables in different parts of the memory because you optimize. And now when people build software, they're abstracted away from this. They're high level. You're coding in similar to like natural language. You can use ChatGPT or similar Claude to sort of code something, but you don't care where memory is. But those languages still exist, and people still do build this, and you build operating systems on this. But you can build great pieces of software and not understand about memory, right? And so as we're evolving, we're understanding, there's different levels of comprehension needed, but the inflection point is less complexity.
Yeah, I want to go back to that part where you said there's 14 countries in Africa whose currency is backed against the French.
So I'm not a historian. Yeah, so they keep their cash reserves with the French.
And then they're allowed to just print whatever they want in their own currency?
So they keep their reserve currencies with the French central bank, and then if they need to top up based off their currency fluctuations, they do. But it's a sort of hang up from sort of.
And that protects them from what? Yeah, the hang up from colonialism. But what does it protect the government? What would another country in Africa that's not leaving deposits with a foreign power run a risk of?
So it's financial inclusion. So it's the same problem that we're trying to solve really for people. And so some countries have this problem, right? It's access to trade. It's access to these sort of sympathetic markets. And so, I think we look at some of the problems or the things we haven't solved in crypto, but it's hard to argue with some of the positives of crypto.
Stablecoins versus Bitcoins. What do you recommend people put their money in?
Stable coins are a great tool to use. You know the value. You're more comfortable with that value. So stable tokens are generally linked to a specific currency, and usually dollars, because everyone understands, or most people understand that dollar rate. And it allows you to transfer that value quite quickly to somebody else or to pay for things. You can, in fact, use stable tokens with certain mechanisms to get yield. And
right, you get it's like a fixed deposit.
Yeah, the stable tokens make yield for somebody else, but you can then, because the value of these things are very well understood, you can then lend them out, right? So we go back to the sort of the lending and borrowing mechanism. You can lend them to people and they'll pay you interest.
So would you choose a stable coin or a Bitcoin?
Bitcoin.
What do you think about companies buying Bitcoin? Are they going to go up or down? Like, are more companies going to adopt this idea of buying more Bitcoins on the balance sheet, or is it going to go less?
It's increasing. I'm hearing more and more. And again, we go back to the diversification, right? So not everyone's going to go as heavy as MicroStrategy, but if you're a global company, it's a good idea to put some of your foreign FX capital into Bitcoin.
So if you're a global company, it's smart to put some of your capital into Bitcoin. What allocation would that be, in your opinion?
In my opinion, 5 to 10%.
5 to 10%. All right. Gold or Bitcoin?
Oof. I have flirted with buying gold for so long, and it has always been Bitcoin.
Always Bitcoin.
Yeah.
You have $10,000.
Yeah.
How do you invest it? What does your portfolio look like?
For crypto.
If it's all in crypto, fine. Then in crypto, yeah.
Yeah, in crypto, 30 to 40% in Bitcoin, another couple of 20% in the other tops. So like Solana, like Near, like Ethereum. And then I invest in sort of smaller ticket cryptos that I think are going to grow in the next 3 to 5 years. Gaming is one that I can just see happening. Loyalty is another one. So it's seeing communities, seeing people engage. So again, it's like I look at it the same as like the equity markets, right? So you have the Magnificent Seven or whatever the top. Whatever we call the sort of the top, the FANG and FAM.
Yeah.
So you invest your lion's share in these that are going to outperform, and then some outliers you expect to maybe come into that.
What is your advice, Alex, for a young aspiring entrepreneur that wants to get into this game of crypto?
Do it.
Do it.
You have to. It's learning through action, right? So you can create test wallets. You can trade on test accounts. You can issue your own currency. You can get testnet. Just being active and understanding those pain points. So, you have the ability to execute, whether it's with or without real money.
Okay. So just get onto it, with or without real money.
With or without, you learn through doing. You can be as academic as you want, as read as much as you want. For sure, there's enough mechanism there, but doing it. Seeing the problems firsthand, you'll probably do a better job than I will because you're new to it, and you'll spot something that you can solve, and this is what entrepreneurs are all about: solving problems.
Right. No, very well said. I think if you ask me, I would say the emotional part you can't get in a book. Like it says, you're gonna feel bad when it goes up, and you might sell at the wrong time and buy high, sell low, or that's. Mm-hmm. But actually, it happens when you're in practice because it's hard to control your emotions. So for me personally, I think everyone loses in the beginning in Bitcoin. Then they learn that lesson.
But doing it also, you buy into it. And so even if you forget about the price, you can issue your own NFTs, right? You can create NFTs for each of your family. You can create a picture, send it to each of your family, and then send them. Like you can engage in crypto without needing to care about the monetary aspect. You can just start doing it.
Just start.
Loyalty. You can create a loyalty program for your street. So, by action is the best way.
Amazing. Awesome, Alex. Thank you so much for being here. Thank you for sharing your knowledge. I think it'd be great for me and for everyone that's listening and learning.
I hope so.